Good afternoon, everyone. TGIF, the 24th of March. Welcome to the show. 2 down, 1 more to go. We'll be wrapping up the week here with some special attention for, who would have guessed, the financial sector. And also, as usual on Fridays, we answer your questions in the mailbag. Ladies and gentlemen, the next 30 minutes is all about the final bar. Hello, everyone. 2 down, 1 to go. My name is Julius de Kempenaer, and I will be your guest host one more time this week before Dave resumes from his well-deserved trip. As always, I am presenting to you from Amsterdam in the Netherlands. On Fridays, we wrap the week, which means that I will try to put all of this week's price action into a bit longer-term perspective and try to paint some color on what might be ahead of us. Mind you, the operative word here is try. And as always, I'll be using the technical tools that are available on StockCharts.com. As you know, the toolkit is all about charts. It ranges from open, high, low, close, candles, line charts to ORGs, point figures, Kagi, Renko charts, all of that. However, as we're answering questions from the mailbag, that's always a segment on Friday shows. I'd like to put your attention to the chart cool section on the website. It's probably an undervalued and underutilized part of the platform. So I'd like to encourage you to check it out when you are wondering about how a particular technical indicator or a technical technique works or how it should be interpreted. There's really a lot of highly valuable knowledge stored in there. Before we get into your questions, let's wrap up this week. Well, finally, a nice line of greens here at the close of this Friday and the close of this week. And not a super volatile day, I have to say. We started the day in Europe that is quite weak. Europe closed quite weak, about a percent and a half lower across the board. And you can see that happening in the US as well. The initial move was a little bit lower, and then during the day, market was picked up again, and we're now about 0.5% higher. So that's finally a nice close of this week. Let me get you, my matrix screen here with some of these major market indices, and you can see that not much has happened. These are daily charts, contrary to the 30-minute charts that we've been using during the week. And you can see that despite this was a volatile week, we had the Fed day, we had a lot of stuff going on, we had a lot of information coming out about banks. But you can see on all these charts, there's not like a major move that was made. Not really. Maybe the small caps were pointing lower, although they ended up pretty strong. So all in all, despite all this price action and all that volatility, not much has happened. I mean, this is today, so Thursday, Wednesday, Tuesday, Monday. Look at that. That's not a lot of price action. So trend-wise, we are still, I would say, in this lower high, lower lows constellation for the S&P 500. We're going to talk a little bit about trend lines later on and how to draw them. But all in all, S&P 500 quite steady into a sort of corrective move, I would say. And the Dow Jones is a little bit worse than that. You can see that that's trading below its late 22 levels. So it needs a little bit more work, and that tells me that the broader market is a little bit stronger than these 30 bellwether super strong stocks. Nasdaq is actually probably the strongest of these three, where you can see that that is trading way above its late 2022 lows, actually pushing above the high that was set at the beginning of March right now. So that is actually going into a pretty nice move. Small caps, that is testing its support, I would argue. If we bring this a little bit longer, you can see how there is a nice horizontal level lining up right here. And a similar thing you will see for the mid cap. Let me make that a little bit longer here. You can see how that is lining up with that horizontal level in the S&P 400. VIX. The VIX was volatile. That's interesting. And we talked to Bob Lang on Wednesday, and he was talking about the VIX of the VIX. And you can see, look at these wild swings here in the VIX itself. The VIX of the VIX, the volatility of the volatility, is something that I learned this week, because I didn't know that indicator, is something that can help you sort of anticipate these wild moves in the VIX itself. I'm certainly having that back on my radar. And then the fixed income stuff, we talked about that yesterday, about how that yield curve is steepening while yields are coming down across the curve. You can see how that is moving on today as well, with the 1 to 3 year treasury bond moving higher, although this is a black candle, but in the end of the day, we're still closing higher. The same goes for the IEF, the 7 to 10 year segment. It's peaking above that 100 level, and the close was 99.89. So we're right at that 100 level where I expect a lot of resistance to come in. So next week will be important for IEF as well. And then you can see that the long bond, so the 20-year plus, is still well below that horizontal level. So the bond market's got all to watch for. Let me quickly go to what happened in sectors. And let me go straight through the RRG, because in the end of the day, I'm hijacking this show with a little bit of RRG anyway. And the image here is actually quite strong, I've got to say. The technology and communication services sectors are well inside the leading quadrant and pushing higher. That is good. We've got consumer discretionary insight improving, and although it's a little loss of momentum here, it's still pointing in the right direction. But what's also very telling, I guess, is that the defensive sectors, staples, healthcare, and utilities, are well inside the lagging quadrant. Staples are picking up a little bit, but look at how utilities they're the weakest sector right now. And healthcare is right after that. I'm reading the scale from left to right on the RS ratio scale. So with these defensive sectors inside the lagging quadrant, that is not a situation that you will find in a strong bear market. So my take is that the corrective move that we're seeing in the S&P is indeed a correction in a longer term move, because this is all talking about underlying strength. We've got technology, communication services inside leading, pushing higher. We've got all the defensives inside lagging and stabilizing right now. But in the end of the day, they are underperforming. If we take a look at a few of these charts, and I think that the communication services deserves a little bit of our attention. And you can see how this has put in a new higher low right at the level of that previous high. So that previous resistance is acting as support right now, just as we would expect from a technical point of view. And if you look at the technology sector, you got kind of a similar move, actually peaking above its previous high. So that is a very nice close this week here. These are weekly charts, by the way, so they're extra strong. We got the weekly close above the previous high. That is really nice for the technology sectors, underscoring the underlying strength that we have here. I promised you that I would do a quick focus on the financial sector, and I'm going into the sector summary, because we can plot all the individual stocks in XLF on an RRG. You may know how to do that. But the sectors are broken down in groups. And if you go to the sector summary page on StockCharts.com and find the line for XLF, which is right here, there is a little RRG icon to the far right of that line. If you click that, it will open up an RRG with all the groups that are inside financials. And right now, you will see them plotted against the S&P 500. Clear that they're all moving to the lower left-hand side, because the entire sector is not doing too well. But watch this. If I change the benchmark to XLF and hit enter, then you get a completely different picture. And what you see here is that actually most of these sectors or groups, I have to say, are actually outperforming the XLF as a sector. They're all pretty good or moving into a nice into a nice RRG heading. And the only two here, this is three. This is full line insurance, and here is life insurance. Here is banks. That's obviously the one that everybody was talking about, and see how that rotates from weakening back into lagging. So that's really on a weak streak. And you got investment services. That's already picking up. So in essence, it's only full line insurance, life insurance, and banks that are dragging the sector down. Now, financial is obviously a pretty important sector for a bull market. So when we see XLF, that's what I'm actually starting to think, that as soon as we see XLF picking up as a sector, and it's not breaking down those massive support levels that we see here, if XLF can hold above that 30 US dollars level and start putting in a new low and move higher, then I think all signs are green for a further move higher of the S&P 500. We are going to leave the market recap sector right here, going to a quick break, and after that we'll be back with the mailbag. Welcome back, everyone, and sorry about the cough. It's I'm trying to beat it, but it's not easy. One more time this week, I'm taking over the show from Dave. My name is Julius de Kempenaer. I'm a senior analyst here at StockCharts.com and the creator of Relative Rotation Graphs. And I'm talking to you from across the pond in Amsterdam, the Netherlands, where it is now about 9:15 p.m. in the evening. We're going to continue on with the final bar mailbag, where I'll be answering the questions that you have sent in. But first, I want to share a couple of announcements with you. In order to get this segment going, we like to encourage you to send in your questions so they can be answered live on air. You can reach us via email on thefinalbar@stockcharts.com. You can use our Twitter handle @finalbarsctv, or you can put a comment below the video in case you are watching this on your YouTube channel. Also, I'd like to share the guest that Dave Keller will be interviewing next week on The Final Bar. On Tuesday, March the 28th, he'll be speaking with Brian Shannon, author and trader with Alpha Trends and the mastermind behind the anchored VWAP indicator. On Wednesday, March the 29th, he'll be interviewing Kelly Cox, an investment analyst at trading platform eToro. And finally, on Thursday, March the 30th, it's Dave Squared when Dave Landry of Dave Landry comes on the show. Now let's continue on with the final bar mailbag. So the first question that we're going to answer, and I'm actually piggybacking a little bit on a question that Dave already answered last week. There was a question about whether you should draw trend lines using closing prices or using highs and lows. And Dave did a pretty extensive answer on that debate, which is essentially a debate. But we have more questions coming in about trend lines, and so I've sort of pooled them into one question, which comes down to the question of, can you draw a trend line connecting only two highs or two lows? Maybe we should say, how do you draw trend lines? Because the answer to the question itself, can you draw a trend line using two highs and two lows, is no, basically, because that is just a line connecting 2 points. That is not a trend line. And you got to be careful, because if you go on the internet and on social media, you will see people drawing trend lines left, right, and center. And sometimes I look at them and I'm sometimes tempted to actually respond, but then I decide otherwise, because it's probably pretty useless. Trend lines connecting only 2 points, that would be something like this. That is not a trend line. Just be careful with that. Same with, I don't know, whatever, taking these two here, I'm saying that that's a trend line and then doing something here. This is not a very good trend line. So how do you do it? First of all, a good trend line needs 3 touch points. And 3 touch points, because then you have a trend, because then actually you know that the market's actually following that trend. And we, if I work my way on this Dow Industrials chart here, then I would say that this is something that could count as a trend line. 1, 2, 3, you see it touching 2 times from the other side. Now, first of all, also drawing trend lines is much more of an art than it is a science. There are a few rules that you have to adhere to. Having at least 3 touch points is probably the most important one. But another one which I very often see violated is what I call trend lines that are connecting highs and lows of a different order. And let me go way back here, say, like, let's get this high here, and let's connect it here. This also, besides the fact that it has only 2 touch points, but we're missing a lot of important highs that are in between. So you gotta connect trend lines that are in the same order of magnitude. And while I'm telling you this, I am reminding myself of a way of drawing trend lines that was introduced by Tom DeMark. He was a very famous technician, a great guy. He's written some great books, doing some great strategies and trading systems. But if you go to one of his first books, first of all, he says you got to draw trend lines from right to left. That's also a very interesting way to do it. But what he's got a very nice technique of labeling highs and lows of the same magnitude. And what he does is he actually looks at a high and says, okay, so when I've got a bar here where let me zoom, oops, this. So look at this one right here. So the high on the left-hand side and the high on the right-hand side are lower than this one here. That he calls that a level 1 top. Then 2 bars to the sides are lower. That's a level 2 top. And in this case, it's actually 3 bars that are lower. So it's a level 3 top. The one that you see right here in the middle has only 1 on each side. So that's a level 1. And you should only connect peaks and troughs of the same magnitude. And that's what I was trying to show here with this trend line, where you are connecting two lines and you're missing all that stuff that's in between. So you actually should have that trend line something like this here. And here comes in the little bit of a art rather than science type stuff. If you go and look at the extremes, you will probably have a hard time finding solid trend lines. But what I try to do is I try to find the meat of the move, so to say, to find where the prices are clustering. So I'm pretty happy to actually draw a trend line. And this is probably a good example here, where you got this one is peaking above that. But here I have this one and this high, and then this one is peaking above it. Here is also one that's peaking above it, but I get like where the majority of the prices are clustering. And that's the way I try to draw my trend lines, to make them as viable as possible. Also, trend line, you start drawing trend lines in a downtrend over the tops, and in an uptrend, you try to draw them over the bottoms and try to connect as many as possible. And one more thing here to wrap it up, or at least for this question. You can see here that this is a very difficult one. You can work your way here. And by the way I'm drawing these trend lines, you can probably already figure out how debatable a lot of this stuff is. What is it? What is a good trend line? And if I work my way here and I see that I got this thing here, and I got like 1, 2, 3, I'm missing this, but the closing are above it. That's another thing that you can bring into the consideration. That's what Dave was also telling you. All in all, drawing trend lines is super difficult. If you do it right, make sure you got at least three touch points, and make sure that they're in the same order of magnitude. That's probably the most important thing to think about. Let's go to the next question. Is there an easy way to get the Dow Jones industry groups separated into each sector? And I've already answered that when I did the RRG stuff for the financials, because that is Where did they go? Here it is. So this is where you go with your going from the sector summary page. Go to that icon of RRG and click on it. So we can do that here for let's go to the technology sector. Everybody loves that. Just go in here. Here you got all the groups that make up the technology sector. You can see how strong the sector in itself is against the S&P 500 because we know that the XLK sector is doing pretty well. We can also immediately see here that computer services is probably the old one out, together with electronic equipment. But if I want to know really what's driving the technology sector, I need to make XLK the benchmark. And now you can see that that is a different story. You got computer hardware, you got computer software, and you got SC, that is semiconductors. Those are the main groups that are driving this market higher. When you look at this chart against XLK and you see these turning up as well, that's going to be a very interesting point in time. So let's see if we can squeeze in one more question. And that question is about Meta. And the question asked is, Meta is moving higher, but RSI shows a bearish divergence. Is this still a strong chart? Let's bring up Meta here. And first of all, there's no clarification whether that's a daily or a weekly chart. So let's start with the daily. And here is an immediate thing. So also, maybe I'm pretty peculiar, but I don't. This peak in the RSI is lower than this one. Some people may call this a divergence. I don't, because I do think that the RSI in between has reached way too low levels to make this a good divergence. So a good example of divergence on the downside is this one here, where you can see that the market's moving lower and the RSI is at the same level, slightly moving higher. This is a nice divergence. That's playing out all below the 30 level. Here, there was no divergence. Mind you, a high RSI level is strong. It means that the market's going up. So don't confuse a high RSI with a weak market. And similar on the downside, a weak RSI with a very weak, with a strong market. That is pointing down. So let's see if we can find. Here is also another example where there is no. See how that doesn't reach. For myself, I'm keeping kind of the 50 level as the break point of a divergence. If there is a divergence building up, but the RSI moves above 50 before actually materializing, I just call it quits. I don't think that's a divergence anymore. But here it worked out pretty well. You can see how this slants slightly upward without moving beyond 40, 45. And then you can see it pointing upwards. So my trigger for divergences is when, in this case, in a bearish divergence, when the RSI breaks above its highs. That would be the trigger in combination with a trigger in the price chart. Oh, I still have that thing going on. So here, I would not call this a divergence. If you go to that weekly chart, because we stick with Meta, because that was the question, then here, it could be that a divergence is building up, but we're not there yet. You can see that this RSI is still moving higher. So it's very well possible that if Meta continues upwards, and if you just look at the chart, forget about the indicator, just look at the chart, this is just a strong move. We rallied, we had a little bit of a consolidation, we're taking out the previous highs. That is a strong thing. We're looking at price levels that go back to that previous peak here. That's about, what's that, 235, 240 maybe. So we're not having a divergence here yet. Hopefully that clarifies the question a little bit on how to look at divergence, how I look at divergences maybe. Here's another one. This is also a very nice divergence. See how these peaks are getting lower, the peaks in the RSI are getting lower, and the peaks in the price chart are going higher. This is what I call a negative divergence. This is not yet a negative divergence. So be careful what you call a divergence or not. If you look at this one here, these peaks are quite wide apart, and you can see how that RSI dips to 50. I don't think that maybe if you really want to, if you're really really looking for it, then you could call it the divergence. But I'm not in that camp. I don't really like that sort of divergences. I like them really nice and tight at very high or very low levels. We need to start talking about the 3 and 3. And my starting point for the 3 and 3 is a relative rotation graph of the FANG stocks. And when I bring this up, there are 3 stocks that have my immediate attention. That's Tesla inside the improving quadrant. That's AMD, which has just crossed into the leading quadrant. And it's Netflix, which is in weakening, but heading towards lagging. So I want to see how these price charts are working out, what we see right there. We start with Tesla. You can see that this is actually a pretty difficult chart. The relative strength, the tail on the RRG is actually looking very promising. The only problem, quote unquote, is that it is at a relatively low RS ratio scale. So there is still a very good possibility that it is rolling over and starting a new downtrend. And that is, if you look at the price chart, is exactly what you can see here. We're running into that barrier, that former support level that has been touched. So for Tesla to actually materialize that strong relative strength move, we do need to break above 220. When that happens, then first of all, the relative strength is on a roll. It'll push Tesla into the leading quadrant, and you will see much more upside potential in the price chart. So for Tesla, I'm actually looking for a break above 220, which will give me a new series of higher highs and higher lows. The second stock is AMD. If you look at AMD on the price chart, then we see that that has actually turned around that downtrend. We are pushing against overhead resistance, but this chart, I hope you agree with me, is a lot further ahead in the game than Tesla was. We got a nice series of higher highs and higher lows here. We need to take out that resistance level, but there is a little bit of leeway. But also that relative trend has turned around. That is actually starting to move nicely back up. If you would draw a trend line here, you would say that that has turned around. So AMD is actually, the fact that it has just crossed over gives it a lot of potential. You look at NVIDIA, for example, which has done that a while ago, that is way further up than AMD. So the upside potential for AMD is way higher than it is for NVIDIA, which is in the same sector, of course. And then finally, my third stock in 3 and 3 is Netflix. And we've seen that moving into the weakening quadrant, and you can see how that is losing relative strength right now. It's actually rolling over. And if I use my inspection here, then you can see how that is pushing against its own resistance in terms of relative strength, and how it bounced off that resistance here in Netflix around 386. If we talked about trend lines, draw a trend line here. Odds are pretty solid that it has been broken, whatever way you draw it. And we're pushing against the new resistance level here. So for Netflix, I think that the run, at least for now, is over. And AMD is definitely stronger. Tesla is probably the odd one out. If that takes out 220, then we've got all to live for in Tesla. Ladies and gentlemen, it was my pleasure to host the show here for you the last 3 days. On the other hand, I'm super glad that Dave will be back next week, because it's a lot of work putting together this show, and I'll be doing a lot of other stuff. So thank you so much for watching. I hope you enjoyed it. Have a great weekend. And I'd love to see you back next week in Sector Spotlight and, of course, the final bar.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.